Well,
Right.
happy holidays, everybody. Come on in. I know that Andy is just opening the doors for everybody to join us this evening. See a
Yeah.
few names on here. Hey, Drew. Hi, Helen.
All right. Yeah.
Therese,
So,
good to see you.
yeah, we're opening up here. Everybody's getting locked in. Let's, yeah, for everybody that's kind of joining right now, just throw some things in the chat. Say hi. Make sure that chat's working. You're not going to be able to talk on here or anything like that, but the chat's going to be the best way to communicate with us while we go through all this. We're just going to give it a minute or so so everybody gets a chance to get in here and uh, and get all settled in here. Yeah, this seemed perfect. Thanks, Drew. Good to see you here. Yeah, so there's going to be a lot of info coming at you guys. We usually get out of here within, like, finish up within the hour. By about 8 o'clock, we should have most of this all wrapped up, and then we kind of hang out for a little bit afterwards for a Q&A session for everybody. But biggest things while we get in here is I am going to be running through this info at a fairly decent pace. So, if you can't keep up or you have to jump out for a bit, this is being recorded, and by tomorrow, I'll have an email out to everybody here with the recording link for it and all that kind of stuff. So if you want to recap anything, it'll be there for you. So that'll be coming by tomorrow. And yeah, so feel free to answer or ask any questions. Either Ryan or myself are going to be on here answering questions in the background. But yeah, use the chat as much as you can while we get into this here. There we go. Yeah. And I'm going to put this in here too. We're going to see this pop up quite often here. This is a booking link. So at any point in time where you think you want to talk more on a one-on-one basis about your own personal stuff, feel free to reach out, book a call with us. We're happy to have a one-on-one conversation with you to see what else can be done with that. But yeah, other than that, I think let's gonna get rolling here, and that way we can get through here and get you guys out of here by 8:30. So again, appreciate everybody showing up on your Wednesday evening. We appreciate having you guys. We are hoping to give you guys some really, really good info. There's a lot of info, and again, this is mostly how to get started when it comes to buying your first home. This isn't about absolutely everything about buying a home because we would be here for hours on it. There's just so much when it comes to buying a home. However, this is how you get started. Mortgage approval is a big one, and mistakes to make when buying your first home. We're here to help save you money, save you headaches, save you a lot of things that can go wrong with buying your first home, and that's what we're here for, just to get you that foot in the door. So first things first, when you guys did sign up, I did say you guys would be getting a copy of my complete guide to buying a home book, plus a buyer's guide. That is this book here that I have developed over the last, well, it's been a couple of years now, but it still holds true with everything in there when it comes to buying your first home. So that will come in the email with the recording of this and everything for you guys in an e-version, so you can read on your phone, computer, whatever. It's a lot of good information there for you guys. So, what we're going to cover in the next hour here is the 6 most common mistakes when it starts with buying your first home. So, not getting a pre-approval, not knowing about the new to Canada program, using your bank, buying directly from builder, all this kind of stuff we're going to go through in detail. And these are the main things when you're buying your first home. So these are the things we're going to cover and how you can avoid mistakes and how these can cost you more money than if you didn't know about these. Okay, there's a big thing here, and this is where we're going to try and save you some money. All right. So let's get this chat moving. I see there's some people in there, but as a first-time home buyer, I'm guaranteeing most of us, I know there's one person in here that isn't, but for most of us in here, they're first-time home buyers. Tell me, what are you feeling with this? Right? What are your thoughts on attempting to buy your first home? I know there's lots of stuff on social media, a lot of stuff in the media itself. A lot of friends and family have things. Do you feel any of these things? Is this some things that is going on with you? Let us know. Let us know where we can go with this and how we can help fix that for you. Because that is the goal by the end of this, is to fix and hopefully, alleviate a lot of these stresses when it comes to buying your first home. Right? I know when I bought my first home, yeah, there we go. Yeah, thousands of it. There is a ton of information. There is a lot of information out there. Anxiety, it's a big thing. Yeah, it's a lot. So I'm glad we're throwing it out there. Thank you guys. Yes, a lot of big stuff when it comes to buying your first home. It's not an easy decision, but at least we're going to give you the tools to help you make an informed decision by the end of this. At least you know where to go and how to get started. So while we get into this, before we get too far into it, I should say, I'll do a little bit of introduction so you know who it is that's talking to you guys and that we're qualified to be giving you this information. So first and foremost, I am Andy Goddard. I am a team lead at ANC Realty. We are brokered by Realty One Group Dynamic here in Saskatoon. I myself live out in Warman. I've lived in Warman since 2016, but I'm born and raised in Saskatchewan. Saskatchewan's been my home for my whole life. We've helped many satisfied buyers and sellers in this area. We don't just serve Saskatoon, we serve the surrounding areas and basically anywhere in Saskatchewan if needed. But I do typically stick around this area. If it gets a little further out, we end up referring that out to people, but we are licensed in all of Saskatchewan. I live here in Warman with my wife and 3 kids and dog. I love being in Warman. I think it's a great place to call home. But again, Saskatoon is the place to be. I've got so much family from here in Saskatoon all around the area. So I love calling this place home, and I love helping other people call this place home. So again, that's me. I am Andy Goddard, a realtor here in Saskatoon area. And when it comes to buying your first home, most of us don't have the money laying around to just grab a handful of cash and throw it at a house. Majority of us need to have a mortgage. So when it comes to buying a home, you need a real estate agent, a realtor to help you out. But the other side of that coin is you need somebody to help you with the financing. You need somebody that's good with mortgages. I have teamed up with a fantastic mortgage broker. I haven't met anybody that's been better for us as a team. He does wonderful work for everybody that I send to him. And we've made this team. We've been doing this for a few years together. I love it. I'm going to let Ryan introduce himself, but you need that mortgage broker to help get you that financing for buying your first home. So go ahead and take it away, Ryan.
Oh, well, thank you so much, Andy. What an absolutely wonderful introduction. Yeah, like Andy, I have been in Saskatchewan my whole life, in Saskatoon specifically, born and raised. I've been doing mortgages here in Saskatoon for over 20 years, since 2002. So yeah, be about 23, almost 24 years now that I've been in the mortgage industry in Saskatoon and in Saskatchewan. I've worked on the lender side. I've also worked on the broker side. So I really have a really good understanding of what makes the broker market tick, what options we have. And honestly, one of the biggest options that we have over the banks is that we have so many lenders that we can choose different pieces to make sure that we have the best options that fit your mortgage, exactly what makes your mortgage perfect for you. Everybody figures that a mortgage is a mortgage is a mortgage, and that just isn't true. Every mortgage is tailor fit to ensure that all the options along the way are perfectly fit for your life and what you need. If you need a minimum down payment, we can do that. Rates, of course, are the best in the market. If you're looking at putting some extra money down with your payment, we'll find a lender that does that the best. If you're looking at maybe some financing down the line on a rental market, we can find a lender that does that really well for you as well. So lots of different options on the broker side that the banks just don't have. They're pretty much a one shop, and that's all they have. We have many banks and lenders across Canada that we use. So back to who I am and what I do. I have again been in the mortgage industry for over 20 years. I am married for 30 years now. I have 2 wonderful boys that my youngest is now having a baby. We're going to be grandparents here in March, so really exciting. But we do service the Saskatoon area primarily, but do know that Andy and I are both licensed across Saskatchewan. So if you're looking at that perfect home, maybe in a Martinsville or a Warman or just outside of Saskatoon, we can do that. If you're looking at something in Regina, we can do that. If you're looking at something, in a small town outside of the city, we can help you there. So it doesn't have to be only in Saskatoon that we can help. We can help you all the way across the province. So looking forward to having a great webinar tonight and really getting you some good information. Couple of housekeeping items. You will see the chat function running a lot tonight. I do see there's about 19 of us on here now. What I do find is that if you have the courage to ask a question, if there is a question that you have, please throw it in the chat box. Usually, if somebody is wondering that question, there are three or four others on the chat that may not have the courage to type it in, but they are also wondering that question. So let's keep this engaged, ask some great questions. And the goal tonight is to get you some information so that you want to talk to us one-on-one and really start your journey here tonight. Okay. The other is you're going to see that booking link pop up here every now and again. We want to talk to you on your specific situations as well. The information tonight's going to be fairly high level, but we do want to talk to you on your specific situations. So click that booking link. It gets us a call one-on-one to start that process with you directly. All right. I'm going to pass it back to Andy to get going here.
All right. Thanks again, Ryan. So yes, good stuff, good housekeeping stuff there. So again, you've got a real estate agent and you've got a mortgage broker here explaining all the process of how to start with buying your first home. So again, you've got some really good, knowledgeable people here to help you out. And as we get into this, we're going to explain a lot of this stuff in detail so you guys are understanding. And again, if you don't understand something or want more clarification on it, like Ryan said, put it in the chat or book a call with us. We're happy to help. So let's get into this. What are these steps to home ownership? So this slide here, this is pretty much everything from start to finish. This is where someone can take hours to explain all this stuff, but I just want to break it down in very simple terms, give you an idea of what happens during the buying process, but know that every step of this, there's so much that goes into it, either behind the scenes that you don't know about that we're working on, or that we're handling up front with you, right? So no matter what, you are in good hands with everything here. So the first thing I tell everybody is when you are looking to buy your first home, learn what you can. I know there's somebody down here that just put, there's lots of information out there, which is true. So we kind of try to condense it all into one here for you guys. But the main and most important thing when it comes to buying your first home is getting mortgage approval, right? If we don't know if you can purchase a home, then the rest of it falls apart, right? There's two main reasons why a mortgage approval is the most important step. Is number one, it lets you know that yes, you can actually go and buy a home. You are now qualified to do so. And it also tells us how much you can buy, right? We've had lots of people go and start shopping when they don't know, and they get excited about these $600,000 houses. But then because it's their first house or however their situation is, maybe they're only approved for 400 or 450. And having to go from shopping at 600 down to 400 is a very hard thing to get around. It's kind of disheartening in a sense because you get so excited about a more expensive house. So we just want people to figure out what their approval is so we know what your range of affordability is. So we shop within that range. And it also helps when we write an offer. It gives us another piece of ammo to help show the sellers that we are actually qualified to buy the home. We are pre-approved. We are okay to go forward with this. So that's why it's so big to get that first, because if you don't have that, you really can't go forward from here. So that's the main thing we're going to talk about is mortgage approval. But once you have that, and once we have that pre-approval in hand and we know how much you can shop for, then we go on the actual hunt. We set up a search, we start touring houses, we start looking at things, seeing what fits you, what areas you like the best, things like that. And we find the right one. So after touring, whether it takes your first house you look at, or if it's 30 houses later and we finally find you the right one, it doesn't matter as long as we find you the right one. Once we find that right one, we write an offer. Okay. We sit down, we figure out how much are we going to offer? What are we going to negotiate? What are we going to put into the offer? And things like that. And again, I can't go over, writing offers on here because that takes a long enough time, but each property is different. So we have to kind of take it case by case. But once we write an offer and the sellers agree to it and they accept it, we go into what's called a condition period. So now we have a few weeks where it gives time for Ryan to finalize the financing, but it also gives us time to get inspections done. A home inspection is a very important one. A condo review is very important if you're buying a condo, things like that. It gives us time to get that done, right? Make sure the property that you're buying is a sound investment. There's no hidden issues that we don't see as we do tours of it. Okay. Once those conditions are satisfied, we should say, right? The home inspection is good, financing is good. We remove conditions and the home becomes a firm sale. So now the home is now officially off the market It is sold to you. We're just waiting for a possession date. So while we're waiting for possession date, this is where you sign with a lawyer. So you go to a lawyer, you sign the title over into your name, you give the rest of the funds that are needed, and you set up home insurance and you get that all good. That way, when possession day comes, keys will be released to us. I meet you at the home and we do a thorough walkthrough again, make sure there's no issues. And then at that point, you are now a new homeowner. So again, that's a very, very, very condensed version of what it takes to buy a house. But again, there's so much that goes into this that we help you with. We make sure you understand every step of the way. We make sure we find you the right property, not just a property, right? And make sure there's things in place to help protect you and your investment, okay? That's the big thing. So if you have any questions on that, again, throw them in the chat. Um, I see they're going to get some questions because we're going to get into the main part that's going to give us a lot of questions. So again, I'll put that link in there for everybody just in case, and we'll get into the main things, those mistakes that I talked about earlier. So again, mistake number one, not getting a pre-approval. As mentioned, we need to know your range of affordability. We need to know that you are able to actually get approval from a mortgage company, from a lender, right? We need to know this. This is step number one. Okay, and this is where I'm going to get into everything you need to know about it. Okay, so there's three things that make up a mortgage approval. This is how you get approval. Okay, you need credit, you need income, and you need a down payment. Those three things have to work together. If one is not there, the whole thing falls apart. Okay, now be in mind that everybody in here is going to have a different set of circumstances. Everybody that goes and gets mortgage approval is going to be different from the next person. This isn't a blanket statement. This isn't a one size fits all. So if it doesn't work for this guy, it doesn't work for everybody. Everybody's different. This is just the guideline. Okay. So if you're thinking that one of these isn't going to work for you or isn't working for you or you need help with it, reach out anyways and we can give you guidance on how to get there or what you need to do, or maybe there is a chance that we can actually get this done, because you'd be surprised how many people come and think, oh, I don't know if I can even get approval based on this, and this. Ryan takes a look at it and manages to say, yep, you are actually pre-approved. We've got you with a really good lender. Okay, reach out, let us know what your situation is. But this is the three main things they need to know. Okay, so number one is credit. All right. When they're going to lend you a substantial amount of money, they need to see what your credit is. Credit score is always going to be the big thing, right? Anywhere from 620 to 650 is the bottom starting point for credit score. Anything above that is perfect. Anything below that, then we get into different lending options, which I don't talk about in this webinar. But 620 to 650 is a good starting point for a credit score. They're also going to look at how do you do with borrowing money? Do you have loans? Are those loans paid off or are they paid on time? Do you have credit cards? Do you have multiple credit cards? Are they maxed out? Are you making the payments on time? Do you have debt collectors calling? Are you in bankruptcy? Have you gone through consumer proposal? Those are big things they want to know, that when they lend you hundreds of thousands of dollars, you're able to pay it back, right? So their credit is going to be a big one. They want to see a good credit history. Now, I know we're going to have a lot of people in here that are new to Canada that haven't been here for, could be anywhere from, 6 months to a year or whatever, and they don't have 2 years worth of history here. There is a new to Canada program that we have in place. It doesn't change anything. It doesn't change interest rates, nothing like that. Everything is still the exact same. It just helps you establish credit quicker. So Ryan is going to touch on that in a little bit here. So don't feel that when I say you need 2 years worth of history, that it doesn't work for you. So just bear with me here. So credit's number one. Income is obviously the next one, because if you're not making money, the lenders aren't going to want to lend you money because there's no way of paying it back unless you're paying full cash for the house. So income is a big one. They want to see, like I mentioned, 2 years worth of tax returns is a common way of seeing it. They want to get a baseline of how much income you make. If you're on a salary position, we can get a letter from your employer that states this is how much I make over whether it's a monthly or yearly, and it's in this many hours, things like that. So we could use that. But the main thing when it comes to income, this is very important, is it needs to be a set amount and guaranteed hours. Okay, that's what they want to see, is how much you're getting paid and are you guaranteed that pay in some way or form. Whether it's you're guaranteed 32 hours, you're guaranteed 40 hours, you're making $20 an hour, you're making $30 an hour, has to be guaranteed. If there's no guaranteed hours, then it gets really hard to do, and that's where you need 2 years of tax returns. So very common. We get this quite often. So jobs that I talk about that aren't guaranteed hours are things like Uber, skip the dishes, DoorDash, commission-based jobs, like car sales, things like that, right? Owning your own business where you don't have a guaranteed salary, things like that, right? So if you aren't getting a guaranteed pay in hours, then it gets where you need at least 2 years worth of history, okay? That's very important. But as long as you've got that, we can work with that. So the income is a big factor. They need to know how much they're willing to lend you and that you have enough to pay it back um, over the next, for months and months on end, right? So they want to make sure you're able to pay that back. Then the third major thing is a down payment. So for buying a home in Canada, minimum down payment required is 5%. So 5% of the purchase price. Okay, so if you're buying a $400,000 house, you need a minimum of $20,000 saved up, whether that's in your savings, which I'll get into a little bit of down payment here. So yeah, sorry, you need down payment, which is the main one, 20,000 if you're buying a $400,000 house, fluctuates depending on the purchase price. Okay, so that's always where the biggest one that's come into effect is where do I get this down payment? How can I get a down payment? So there is about 3 to 4 ways of getting one. The most common one is everybody uses their own savings, right? Whether it's through an FHSA or you have it in a straight savings account, right? That is the most common one. If you're new to Canada and you have money across seas and you want to bring it over here, that's fine. There's just some things you got to watch for, which Ryan will talk about here. But you can definitely bring your money over, get it into a Canadian bank account, and you can eventually use that money. The second way is if you have any RRSP saved up, you're able to withdraw up to $65,000 of that per person. So if you and your spouse are going together on this house, you can each take out 65,000 and use it for a down payment. You do have to start paying it back when you take those out. So please, before you go further with that one, reach out to your provider who gives you your RSPs and just have that conversation with them. They'll explain all the details with that. But that's another option. The third option is what we like to call the bank of mom and dad. You can get a down payment as a gift from an immediate family member. So mom, dad, brother, sister, grandma, grandpa. Anything outside of that gets too far away, so it has to be immediate. But they can write a gift letter saying, we're going to gift you the down payment, and you're able to use it, and it works fine that way. So again, those are the three main options. There is a fourth option, but it's very inclusive. So if anybody on here is part of the Métis Society of Saskatchewan, the Métis has a first-time home buyers program where they give you up to $15,000 and some closing costs covered as long as you're part of the Métis Society. So if anybody here wants to know more about that, reach out directly to me. I'll give you the contact number of who to get a hold of, and you can start the process like there. As long as you qualify for that, we can use that as the down payment as well. Okay, so those are the four main options for a down payment. And those three things have to work together. When I say they have to work together, down payment also affects it too, right? So if you have $20,000 saved up, but your credit and your income allows you to be approved for up to 500,000, but you only have 20,000 saved up, you can only get approved for how much your down payment is. So if you don't have quite enough to get out there, it will cap you at however much it will let you go to. So if that makes sense, right? So if you have $15,000, it's going to cap you at 300,000. If you have 20, it's 400, right? So your down payment does play a big factor into how much you get approved for also. So just keep that in mind with those things. So again, I threw a lot of information at you guys. It's a lot, I understand. Ask a bunch of questions, book the call with us. Again, these are just the main things when it comes to mortgage approval. Those three things. So credit, income, down payment, guaranteed hours and pay, decent credit, and a down payment is needed to get that. So if you're thinking one or two of those things don't work, reach out to us anyways. We're happy to give you some guidance on how we can help you as quick as possible. Okay? All right. The nice thing about mortgage approval, though, is it's underwritten, and the pre-approvals are underwritten. So they're going to review your income, your credit, your down payment source, but they are very reliable, and it tells us the maximum qualifying amount. Again, we want to know our range to shop in because it's just so much easier to shop in the range we have instead of shopping outside of it and then having to bring it back. It's just very hard to get back into the buying mood from there. Okay, so gives us that idea of how much you can shop for. Last little thing on it before we head to the new to Canada program. Questions about cosigners that we get. So a co-signer is somebody who can sign onto the mortgage with you to help you get approval. So maybe there's something that's affecting you getting approval, but you have a co-signer that could help kind of get that mortgage approval for you. Again, it has to be somebody who is either permanent resident or Canadian citizen and an immediate family member, and they have to be able to qualify for the mortgage with you. Okay, so they can't just say, I want mom to help me. She has to be able to get qualified as well with you, but that is something that we can do, right? We've done it before. We've used parents, we've used brothers, right, to help get somebody who is a co-signer and help get them a mortgage. So, is there a risk to it? Yes, there is a risk to having a cosigner for the person that is cosigning. They're basically coming on saying, I am verifying or vouching for this guy. They're going to make payments. However, if you miss a payment, they will come after the cosigner for those payments. All right. So there is a risk to the cosigner. So we want to make sure everybody's aware of it. And they are committed to being a cosigner for you for as long as you can't be approved on your own. But once you can be approved on your own, then you can go and you can get them taken off the title of your home and have them free and clear of it. There are no extra costs to do it when you buy the home. It's just we shop for the house the same way as normal. They just have to sign the documents as well. The only extra costs that come up is if later on down the road you want to take them off the title of your home, you have to pay the lawyer to do that. I think it's about $700 or $800 right now to do that. So some choose to do it, or some wait until they decide to sell that house. And when you sell the house, everybody removes off the title, and then you can go buy your next one and not have to worry about them. So there's some options here with co-signers. If you think that's something that would help you out, let us know. Reach out to us. We're happy to have that conversation with you and see if that will help you. Okay. So that is mortgage approval in a very condensed version. Again, this is just a big umbrella of it. So many things can happen with this, not just, okay, that he said this, so that's not going to work for me. No, it's not necessarily true. It's just what they look for, but then there's so many ways to work around that. Okay. I see there's a ton of questions coming up. That's fantastic. Keep them coming. I'm going to pass this off to Ryan, though. He's going to talk about the New to Canada program for you guys to show you how to avoid any issues with that as well. Okay.
Well, thank you so much. Good intro and great questions, you guys. Lots of good stuff coming through there. Keep those questions coming. We're going to do our best to stay on top of those questions as you are asking them to make sure that we get you that information quick. So, one of the largest segments that we do see for first-time homebuyers is people that are fairly new to Canada. We've already kind of had a few questions surrounding that. So Baba Tunde, hopefully I pronounced that correctly, had already kind of opened up that door and said, can I get a mortgage even though I'm on a work permit? And absolutely we can. There's a specific program called the New to Canada program here that we're going to talk about and tell you exactly what we can go through to get you qualified to buy a home, even though you are new to Canada. So one of the largest segments, as I mentioned, of the first-time homebuyer market in Canada, and one of the largest drivers of the economy in Canada is friends that have immigrated to Canada within the last 5 years, typically called our new to Canada friends. The government knows this, our banks know this, our mortgage industry knows this. We want to make sure that we're going to have options to get our new immigration friends into housing as quick as we can. As Andy mentioned, the three biggest pillars that we want to talk about as far as getting mortgage qualifying done are income, credit, and down payment. Now, if you are fairly new to Canada, a couple of those you might not think will fit, but obviously your income is going to be fairly new coming into the country. Your down payment might be coming from another country. Your credit is likely not established in Canada yet as well. So the government really knew this. So they've developed a specific program called the New to Canada program that really allows people to get into housing fairly quickly when they immigrate into Canada. So we're going to kind of go through a couple of the pillars and how they really correspond to the New to Canada program. We'll talk about those specifically. So, when we talk about New to Canada, it's really people that have immigrated to Canada within the last 60 months or 5 years. Really, if you have been in Canada for longer than 5 years, you're probably very well established already. You've got a Canadian credit. You've got a job that you've had for 5 years. So we're really talking about people in that 0 to 5 year window as far as where that New to Canada fits. Now, specifically, Babatunda, here's that question that you had asked. Can I get a mortgage in Canada being on a valid work permit? Absolutely, you can. So the two things that really fit well underneath the New to Canada program are those people that have come to Canada with a permanent residency status. We do see a ton of people who have actually got their permanent residency status before they come to Canada. So we do see lots of people that are well set up that way. But we also do see lots of people that come here to work and they come to Canada, they get what's called a valid work permit. And as long as your valid work permit has at least 183 days left on it at the time of the possession on the home, you are absolutely, qualified to use the New to Canada program. So the big thing is permanent residency or that valid work permit as long as we do have that 183 days left on it. Okay. Now, the three pillars that we always talk about, income, down payment, and credit, we'll talk about the income piece first. Now, typically, what we do find is that income is looked at regardless of the New to Canada program or a normal borrower. It's really the same. Okay. So, what we're looking for is that you've got 3 months worth of full time employment. We want to make sure that that job is even though it's going to be fairly new, there is a little bit of stability there. Even if you're kind of right at the end of your probationary period, usually 3 months is kind of about the timeline that most lenders are looking for at a minimum. So, have a look at that. So even if you are still on the end of your probation, we can usually make that work for you as well. Okay. The other thing is that you must be paying taxes in Canada. So it has to be a job that is in Canada, that if you are salaried or working an hourly wage, that is taxed in Canada. You're taxed with like your Canadian income tax, your unemployment, things like that. So it does have to be taxed in Canada. We do get asked a lot for people that are working out of country. Unfortunately, new to Canada and out of country income, there's really just no way for our lenders to verify the validity of that. So we can use income that is generated out of country, but it does have to be claimed on at least 2 years worth of tax returns in Canada. And it does have to be with a major corporation. So we can look at that, but there has to be a larger history timeline. So if you're fairly new to Canada, out of country income typically isn't going to work for you. But if you are coming to Canada and you start a job, you've got some guaranteed hours, that is looked at exactly like a normal Canadian borrower would be looked at. Okay. As Andy mentioned, structured salaried or structured guaranteed hourly income is wonderful because it gives us a really good baseline on you're going to generate either a salaried income per year or you're going to have a guaranteed amount of hours per week that you are guaranteed to work. It gives us a baseline that we can say to a lender, there's guaranteed income here that will be every week paid at a minimum, and that's what they allow us to use even if your job is fairly new. As long as there's guaranteed hours there or a salary, we can use that income right away. Now if you do have some of those uh, incomes that do fluctuate, as Andy mentioned, like Uber and DoorDash, if you're self-employed, if you're on a commission-based structure or a bonus-based structure, of course, those incomes do fluctuate. So when a lender is looking at income, what they're really looking for is consistency and stability. Okay, so if you do have guaranteed hours or a salary, that is consistent and that is structured and that is stable. That is great. That's the best income they can look for. But if you do have income that does fluctuate, they can still use it. They just want to see a little bit of consistency and stability. So that's where that 2 year rule comes in. So if you are in, an Uber, a DoorDash, which is still technically self-employed, or a commission or a self-employed basis, we can still use that income. They just want a 2 year history and they want to have a look at your tax returns for 2 years to see what income you generated. And then they average that together to get a baseline for the consistency of that income. Okay. Now, one question that we do get asked a lot on the income side specifically is sometimes when new people immigrate into Canada, they maybe come in parts. So maybe, one part of the family will come with the children. One spouse will stay back. So we get asked a lot, I'm here with my children, I'm working, My husband is still working overseas. Can I use his income to help qualify for the mortgage? He's still working back in our country of origin. He will be coming here within a year or two, but we want to use his income to qualify. And unfortunately, again, because we can't guarantee there's really no way for the lender to correspond, validate the income in another country or the consistency and longevity of that income. So unfortunately, income from another country would not be allowed to be qualifying income. Again, unless it is kind of a long-term thing, we've got 2 years worth of tax returns to show that income being claimed in Canada. Okay, so that's one question we do get. Really, it's pretty rare that we are able to use it. We've seen a couple of situations where it does work, but usually people coming into Canada, they're going to be quitting that job anyway once they do come to Canada. Okay. Now, slide number two, the second pillar that Andy always talked about was that credit side. So we've talked about the income side. Let's talk a little bit about that credit piece as well. So, as mentioned, we are fully aware that when you're coming into Canada, you're not going to have any credit, Canadian credit established, and the government is pretty well aware of that, and our mortgage lenders are as well. So, what they do with the New to Canada program, usually when you come to Canada, if you are set up with an immigration officer or anything like that, the first things they're going to have you do is get a bank account at a bank, and they're going to get you set up with some sort of a credit, either a line of credit or a credit card or both. Really gets that credit rating started, gets you a credit bureau started, and gets you building credit right as soon as you come into the country. So if you are fairly new to the country and you don't have that yet, give us a call. We'll get you set up with a bank to get that process going for you. But yeah, the quicker we can get that credit moving forward, the quicker that is going to establish. Now, what we do have is a couple of different options for those that are fairly new to the country. And I'm talking really kind of in that 6 to 12 to 18 months range. So if you have immigrated into Canada in the last 12 months, what we typically look at here is that you have to have at least 10% down payment if you are underneath that 12-month mark. So what they give us is a 10% down payment requirement. And what they look at for credit is 6 months of your primary bank account. So whatever bank account your pay goes into and all that sort of stuff, they're going to look at 6 months worth of bank statements to say, yes, these are handled well. There's no missed payments. There's no NSF fees in there. We're satisfied with 6 months of your primary account bank statements as long as we have that little bit extra 10% down payment requirement. So you have to be here at least in Canada for 6 months to have that 6 month bank statements. So that's kind of the minimum for the New to Canada program to get any sort of a credit establishment that the Canadian lenders will use. Now, if you have been here over that 12-month mark, you do qualify for the normal 5% down payment in Canada. So in Canada, every other borrower can get 5% down payment. So that's kind of the minimum here. So that's really the goal, is what we're looking at to get you into the minimum down payment. Once you've been in Canada for at least 12 months, you will qualify to also have that 5% down payment as a requirement. What they look at for the credit side is they will look at 12 months worth of your rental history. So wherever you happen to be renting, you and your family are renting, they're going to look and say, we're going to get bank statements to show your rent paid on time and a letter from your landlord that says, yes, we have had no issues with the rent being paid for 12 months. And they're also going to have a look at any structured payment that you have for 12 months, whether that be a power bill through Sask Power, an energy bill at where you rent, an SGI plate if you have a vehicle. If you make an RSP contribution every month, we can look at that. If you have a cell phone and you make cell phone payments every month, we'll look at 12-month payments. So any structured utility, any payment that you have that has a minimum of 12 months worth of statements on it, we can use that for your credit. So you can see how, even though you might not have a lot of Canadian credit in the way of a visa or a line of credit or a car loan, you're going to be able to show at least 12 months via rent history, via power bills, via phone bills, things like that, that we can use to show that you are still a good credit risk here in Canada. So Relief on the credit side. If you've been here 6 months to 12, we need 10% down and you need 6 months for the bank statements. If you've been here over 12 months in Canada, we can use 12 months of rental history and 12 months of one other payment, and you can get that 5% down payment. Okay. Now, the last thing that we want to talk about as far as pillars are the down payment side. And this is quite important as well with the New to Canada program. So, what we've typically find, and I've talked a little bit about kind of the down payment requirements, 5 or 10%. So, if you are again here within that 6 to 12-month window, typically what we're going to need is a 10% down payment. If you've been here over that 12 months in Canada, we can go right for that minimum of 5% down payment. As Andy mentioned, a couple of different ways you can get that down payment. If you have savings in that bank account, I mean, that's a savings account, that's a checking account, that's a TFSA, that's a first home savings account. Those two are set up directly with your bank. And I will kind of stop to put a plug in. If you are a first time home buyer, one of the largest things that you can get done right away is get a first home savings account. So a first home savings account automatically any money in that account is tax free. So any money generated in that account is tax free on the investment side, and it will also give you a write off on your income tax. So two benefits for the price of one on that first home savings account, and it puts your money away. It works exactly like a savings account at the bank. Okay, so get that done. Get your first home savings account. Get that money into the bank right away when you come to Canada. What we do find as well is that some people maybe will borrow or sorry, will maybe get a gift from family. That is absolutely allowed under the New to Canada program as well. So if you have an immediate family member, what we mean by immediate is mother, father, grandparent, or child. Those qualify as immediate family member. If they are willing to give you the money on a gift basis, you can use that for down payment. All we need to show is that the money has gone into your account, and we will have you and your gifter sign a gift letter saying that the money is non-repayable. So, gift from family, absolutely allowable. If you have RSPs that you get, that you put into, or you maybe get from work, maybe you're putting in 3% at work. RSPs can be used for down payment as well. So, lots of different options that we do have for down payment. Now, one of the biggest things that we want to talk about here is, especially for the New to Canada program, is money that is coming in from overseas. So if you're coming in from another country, you've been here 12 months, and you still have funds that might be in your country of origin, these can still be used. What we're going to do is track that money. So the banks always need to track all the movement of the money for the down payment for the last 90 days. Okay, so the last 3 months. So if you have money in a savings account here in Canada, great. Get it over here, let it sit in that savings account for 3 months. That's perfect. That's the best setup we can have. But if you do have money that's kind of moving around, maybe from your savings into an FHSA account, we're going to track both accounts to show the movement of money during that 3 month period. Now, back to if you do have money moving in from another country, it can absolutely still be done. What we're going to show is a 3 month history. So we're going to get the bank statements from your country of origin, showing that the money was in there to start with. We're going to get the wire transfer that shows the transfer of money from your country of origin into your Canadian bank account. Once we get the money moved into Canada, we're going to show the bank statements for your Canadian account to show the money landing and sitting there for that 3 month period. So it can still be done. We just need to track the money through the accounts. And the big difference would be the wire. So you're going to wire money typically from your country of origin into your Canadian account. Now, I will kind of preface this by saying some countries it is easier to move money out of than others. And you're going to have to find whatever the laws are in your country of origin to see what those laws are. Some you can move money freely out, some you can only move it out a certain amount per year. Some there are really large costs to move the money out. Nigeria being one of those. Sometimes moving money out of Nigeria can be very costly. So, staying ahead of that and getting that money moved into your Canadian account as quick as you can and as seamless as you can, always the best option. Don't wait till the last minute to move it and assume it's going to be easy, because typically it can take some time and it might be a little more costly or cumbersome than you were planning for. So, move that money into your Canadian accounts as quick as you can to alleviate any issues with the down payment. So hopefully you can see that we do have some great options, even though you are new to Canada, to show established credit, to show that down payment, and to show a really strong, stable income right out of the gate and qualify for a mortgage in Canada. Usually is sometimes as early as 6 months in Canada. So lots of great options. If you do have a specific situation that this, you think this might fit well, give us a call. Click that booking link. Let's talk to you. We want to find out your situation one on one. I've done a lot of these new to Canada mortgages. We can have a good conversation and I can guide you on all the steps to make sure that you're prepared to buy a home, whether that's moving the money out of a country of origin, whether that's getting set up with a first home savings account, or whether that's maybe having a look to maybe or make sure that our credit is good and stable, or we have the bank statements that we need. Let's talk to you. We want to make sure that we can guide you all the way through the process. All right, so that's our new Canada program, a great fit. I'm going to pass it back to Andy to continue on with the webinar and looking forward to talking to you.
Awesome. Thanks, Ryan, for all that info. So it is a lot of info that is going to be coming at you guys here. So again, like I said, this is going to be recorded. You guys can catch up, or the easiest way is book a call with us. Book a one-on-one session with us. We are happy to discuss more with you. We can always just dive into what you need and how we can help you as quick as possible and get you there, whether it's now, later, whatever your time frame is. All right. So I'm going to step into one more thing on the financing thing, and then we'll get on to the little bit of real estate stuff. And then we're still going to get out of here by about 8 o'clock. But the last little mistake you can use is using your bank. Now, there is a reason that I have teamed up with Ryan, that we work together so well, and I don't have somebody that just works for a bank on here, which I could. My dad is actually the general manager of a credit union back in my hometown. However, I love working with Ryan as a mortgage broker, mostly because of the way he treats treats everybody that I send to him, right? I've worked with people at the banks, and I'm not saying all the banks are bad. I've worked with some good mortgage brokers at banks, but I've had a lot of issues with mortgage brokers from banks. Okay. And I get a lot of people that come here and they're like, well, whether they're new to Canada or they're just starting out and saying, well, I've been banking at this and this institution for my whole life or for years, and I like them, and they're very helpful with everything, and they are, right? I use RBC myself for checkings and savings accounts and maybe a couple investments or whatever, right? But when it came to buying my house, right, you got to use a mortgage broker, right? They'll save you money, they'll get you the best interest rates and the best programs, and I'll explain a little bit why. But this is very important. I don't just use Ryan because he's on here. I use him because he does solid work, and this is why. Right? So mortgage broker. So Ryan has access to over 30 different lenders' products. Okay, so he can shop around. If you like Scotiabank that well, he can use Scotiabank, right? But he can also say, if you like Scotiabank, this is what they're offering, this is their program. However, I think you're going to get a better deal with these guys over here, right? And he'll at least give you that idea of that you have options instead of just one size. Because if you go to RBC, Scotiabank, CIBC, they're going to sell you their own product. That's it. Or at least Ryan can shop it around and find you the best fit. He also works the same hours as I do, right? In real estate is typically evenings and weekends. We're helping people find a home when they're not working, right? Well, when they're not working, the banks are also not working, right? So when we're writing a competitive offer and potentially a multiple offer situation, and I have a question for your mortgage person and they work at a bank, it's happened more often than you think that I tried getting a hold of them, but I get the voicemail from the bank saying we'll talk to you in one business day when we're open. And it doesn't help us when we're writing a competitive offer and they need to have that offer in like tonight. Every time I needed something from Ryan, Ryan answers his phone, right? Whether it was 7 o'clock at night, 8 o'clock at night, 9 o'clock at night, he would answer it because we needed him at that moment, right? So that's why it's the customer service that you get with it too. And it's not just the customer service, it's also the interest rate, right? Ryan's going to offer you the best mortgage rate up front. Okay. Banks can sometimes and tend to give you the bank posted rates, which are a little bit higher, and you may have to negotiate that down. But some people either don't know that or don't like to do that. Ryan does that for you. So if you want a good interest rate, this is what the good interest rate is, right? And it comes with a great program. So not only are we going to give you a really good program that can help you pay down your house quicker and get you mortgage free faster, it's also going to save you money by not charging you so much in interest. I'd rather see that money that you're spending on interest go back into your pocket, not the bank's pocket. Okay. The whole point of buying a home is to invest in it and to get your money back. And, when you go to sell it, right? I'd rather that money go into your pocket than you spent an extra 5 to 10 grand on interest over how many years that just went away to the bank. Okay. Again, we're here to save you money and save you headaches and give you the best service possible. And like I mentioned, you can call or text Ryan at any time with any question. I mean, please don't message the guy at 3 o'clock in the morning, okay? But like if it's an emergency, okay, sure, maybe. But evenings if you need a question, absolutely, okay? Banks, again, once they close those doors, you're done. You don't get a hold of them until the next day. Okay. Ryan works for you and your best interest, much like myself. I work for you and your best interest. I want to find you the right place for the right price, right? Where the personal broker at the banks, they work for you, but they also have to make sure their bank, their employer is happy too. So there's a slight bit of conflict there. Okay. Like I said, I have worked with some great people at banks, but I've also had more of the headaches from the banks. I can tell you a few stories, but we are running out of time. But we did have a guy that used a bank. We ended up doing I wrote 3 offers, got 3 accepted offers, and the bank crashed every single one of them until I said, enough is enough. Go talk to Ryan. Talk to Ryan. We ended up getting a deal done the very first time he used them. So it's very, very important to have somebody like Ryan in your corner to help you get the best rates and the best program. Okay. Not just the bank because your checking and savings account is there and they've been nice about it. Okay. There is also could be potential payout penalties. So a payout penalty is when you get a mortgage, it's typically 25 to 30 years. If you decide to sell your house and break that mortgage before you have paid out the mortgage, you potentially can pay a payout penalty. Ryan at least can explain to you how it could be little or none. We can't guarantee none, but it can be little, right? Bank penalties can be a little bit more expensive, so watch out for that, right? We do not want to penalize you for a change in life, whether it's you've decided to move to a different city, province, country, right? It's your first home. Most people don't live in their first home forever. It's a stepping stone. So, of course, in maybe 5 years, maybe 10 years, you're like, I want to, upgrade, get a bigger house. We don't want to penalize you for that, right? Or you decide to downgrade, or whatever the facts that come into it to break your mortgage, we don't want you to be penalized for it. So again, we're here to save you money and protect your investment. Okay. So those are the main things about the financing side of things. That's pretty much takes up the majority of our time. We are running a little bit later than I want to, but that's okay. I'm just going to quickly go over the last little bit of the real estate side of things, and then we can hang out and answer any more questions here. So a mistake number 4, this is the real estate side of things, is buying directly from a builder. Now, what's the problem with that? The problem with builders is the same thing is they are there to try to sell their product and their product alone. Okay. You go to any builder here, they're going to just try to sell you their place. My job is to find you, like I said, the best place for the best price. And if this build fits you better than these builders do, then I'm for sure going to show you that option. I've worked with lots of builders in the city. So I know what builders offer. I know what some do. I know how some work. I know how good quality some builders are, and I know quality of other builders. So I have that knowledge for you. And I have talked to former reps of builders, and they have verified that you do not save any money going directly to the builder. People think because they go directly to them, they're going to get some smoking deal. They don't. They honestly don't. Right? I've been told that they actually have, they may not get as much stuff put in unless they come with a realtor. Okay, I'm not just saying it to plug myself. I have been told that. So, and what's this mean? And how can I save you money on not buying directly from a builder? New builds, when they come out, they typically do not touch the purchase price. Okay. When they list it for $500,000, that's going to be their purchase price. They are not going to touch that price because if they drop even $5,000 off of that price and they have a block of homes, each home they sell after that, every realtor is going to see that they drop price. So we're going to want them to drop price on the next one. And it's just going to keep going down, down, down till their builds are now under 500,000 and it could be close to 450, right? They will not touch it. They will stand firm at their purchase price. But what's there's things that I can do for you is I can get them to put in some add-ons for you. Lots of new builds don't come with appliances, so I tell them to put appliances in. Some don't come with air conditioning, so I'll ask them to put an air conditioner in, or a back deck, or a back fence, or landscaping, or a basement, or upgraded fixtures, things like that, right? Whatever it is, we will try to negotiate it in. And if I can't get them to put it in for free, I can at least get them to knock some price off of it. So if an appliance package is, I think the one's quoting $8,000 right now, I can say, all right, we'll give you the purchase price, but I want you to throw it in for free. And if not, I want you to put that appliance package in for half the price, right? At least get you a deal somewhere, right? And I do that lots for lots of people buying new builds is if I can get them to throw things in for free, I will. That's going to save you money and it's going to already increase the value of your home right away just by having those add-ons in there. Okay. So again, you don't save direct money. You just get more options that you can shop for, and you get things added onto the house, negotiated in where potentially the builders won't do for you. Okay. Again, some do, some don't. So you need to have the right person to guide you when it goes to buying a new build. All right. The last little bit is a home inspection is a big one. When buying a home, whether it's brand new or used, get a home inspection. I don't joke around with home inspections. I think they are worth every single penny. Okay. This is usually where I typically ask for it, but because we're getting short on time, I'm just going to flat out tell you a home inspection for a typical home is about $450 plus GST. So it comes around to like anywhere from $475 to $500 for a home inspection. Okay. I've had people say, "Well, that seems like a lot of money," but when you are spending three, four, $500,000 on a home, that is pennies compared to what you learn about everything about the house. When we do a walkthrough of a house, it typically takes about anywhere from 15 minutes to a half an hour, sometimes 45 minutes, but we can't see everything about the house. We don't have time to test everything in the house. I don't crawl around in attics. I don't crawl around underneath where I can't see, right? I can't test every piece of plumbing and electrical in the house, or am I qualified to do that? That's what these guys are for. So the nice thing about a home inspection is built into the contract when you buy a home. If you are not satisfied with the home inspection because something came up that was very detrimental to the house, you can walk away and go find something else. Or we can negotiate them to fix it for you. So when you take possession of the home, it's already fixed for you. Or we can knock some off the purchase price so you can fix it on your own time. Again, this all depends on the severity, what the issue is, things like that. But some things we've had people fix, just off the top of my head, is maybe there's a sump pump that wasn't working. We got them to fix. Maybe there's something in the electrical panel that needed to be fixed. Maybe there's a leak on a sink that needed to be fixed. The furnace wasn't working properly, right? Little things like that. It's the big things we really want to look for, like cracks in foundations, um, water getting into the basement, leaks in the roof, leaks in the attic, mold, infestation, things like that, right? And so they check absolutely everything. It takes them hours and hours to do. So do not skip these. I've done new builds with a home inspector, and the home inspector found things that they missed. Okay, they are human, they do make mistakes. So that's why they're very important. But at least with a new build, you can send the whole report to them and say, fix all this stuff because you're under warranty, right? So that's a big deal with these things. So this is typically what you see in a home inspection. All right. So they're not invasive. They cannot cut holes in walls. They cannot rip things open to look behind it. So if they can't see it, they have technology to try to see behind it. So they have thermal imaging cameras, tells us if there's any heat or cold coming in places where it shouldn't be. Moisture detector meters, they check your electrical, so make sure there's not going to be any fire hazards. They're going to make sure there's insulation everywhere. They're going to make sure that the plumbing is fine. Everything that has water running through it, they're going to test, make sure there's no leaks anywhere, right? On the bottom right there, you'll see in his one thermal camera that there was a leak under the sink. We had them fix that before we took possession. Okay. Furnace is a huge one. Welcome to Saskatchewan. We are into the winter. We're getting there now. We're going to be hitting minus 30s at some point. You want your furnace to be top notch and working properly. So they rip that, they open the panel up, they look into the furnace. If it has an air conditioner, they'll look into the air conditioner. They'll test every appliance in the house, right? They'll check the foundation where they can. They'll check the roof. They'll check the garage. They'll check everything. Everything they will look at. And if they're and they will find things. That's the thing about a home inspection is they will find something. Okay. It's just how severe is it? We don't really want to focus on the little things like an outlet in the one bedroom isn't working properly. An outlet takes $5 for the part and it's easy to change. Okay, we're looking for things that are not working like furnace, electrical, plumbing, roof, windows, doors, things like that. We want to make sure all that stuff is working properly for you. And if it needs to be fixed, we'll have some plan in place to get it fixed for you, or we'll negotiate those things in. Okay, very, very important. It can save you that $500 can save you literally tens of thousands of dollars if they find a leak in the roof. If there's mold somewhere, there's a leaking foundation. The foundation itself is has a big issues, right? It will save you thousands and thousands of dollars. So do not skip a home inspection. Super important when buying any property, any property. Okay. Okay. I'm going to wrap this up a little bit here. We are at 8 o'clock, so I'm just going to go over just a tiny bit. But if you got any questions on home inspections, things like that, the process of it, let me know, reach out, book that call with us. But the last little bit, because condos are getting more popular and they are a very suitable property for first-time home buyers. So anything with a condo, whether it's an apartment, townhouse, some houses are actually part of condos now. If it has a condo corporation attached to it, it is mandatory that you get a copy of the condo documents. They are called an estoppel package. Okay. It's mandatory that you, the buyer, get a copy of it. The sellers pay for it, give it to you, you review it. What is not mandatory is you having a lawyer review it, who are the ones that are qualified to review these. Okay, they will look over everything, and everything in this will give you so much information about the condo, how it's run, who's running it, how much condo fees are, how much condo fees go to what part, how much is in the reserve fund, the maintenance fund, what's been fixed, what needs to be fixed, the bylaws, what you can and can't do in a property, who does the maintenance, who does the insurance, on and on and on and on. There's like hundreds of pages of this stuff, okay? Tons of stuff. What you want to know and what you need to know when buying a condo is how much is in the reserve fund, is it healthy? If there's any issues that come up, that's the money they have to use to fix it. So if there's not enough money in the reserve fund, what can happen is they can come to you and every unit owner and ask for more money. So if your condo fees are $400 a month, they may need what it could be anywhere from a couple hundred to a couple thousand to help fix this one thing that needs to be fixed because they didn't have enough money in the reserve fund. So we need the lawyers to review it, make sure that the reserve fund is healthy, make sure that there is a study being done every 4 to 5 years, and making sure they have a plan in place for everything. So that is very, very important. That's what's going to save you the money is if it's not properly run, it can bring what's called a cash call where they ask you for that extra bit of money. And if they ask you for a bit of money, there's also a chance they're going to jack up the condo fees too to help replenish that reserve fund they don't have enough of. Okay. So again, we're here to help you save you money. Things like the bylaws are very important with renos. Some people go in and start doing a bunch of renovations inside, and a lot of condos have some restrictions on what you can and can't do, especially apartment condos. Okay. Some don't like it if you rip out the carpet and put in laminate or hardwood floor. They may have a bylaw saying you cannot take carpet out of the main living area because it affects the sound barrier between you and the people below you. So if you didn't know that, went and ripped out all the flooring, put new flooring in, but it's laminate, didn't know about it, you could be caught, fined, and have to redo it. So it's going to cost you double, if not more, because of the fines, right? So very important that you look into this. I never shy away from condos. I think condos are a very good investment especially when it comes to first-time home buyers. It's just get this looked at, have the lawyer, you're going to pay the lawyer to do the transaction anyways. They're going to look at these for you as well and make sure that you know what you're getting into. And I've had lawyers tell me not to buy certain properties because of this bad estoppel. Okay. So they're not just going to say it's good or bad. They'll say, I don't recommend buying that. Okay. So very, very important. You can save, again, typically thousands of dollars if you're unaware of how the condo is run. Okay. Again, I can go on forever with a lot of this stuff. I'm pretty much throwing a bunch of information at you guys. But that's essentially the start of this. This is what you get started with. This is how you save money. This is how you watch out for it. But if you want to know way more that's involved with this, I am more than happy to sit down and explain a lot more things in detail with you. But most of this stuff you learn on the fly. Once you get the mortgage approval and you start house hunting, then we start learning the rest of the stuff. It's easy to catch on after that. Okay. So hopefully you guys are feeling a little bit better, understanding that there's people out here that's going to help you, that we're here to watch out for you, and that this is the proper way to get started and avoid any setbacks. Okay, so I'm really hoping that we're able to help you guys with that. Again, book a call with us if you need to. We are looking forward to talking to the people that already have booked with us. But yeah, this is essentially the last little bit. We're going to stick around for as long as you guys want. Ask questions away. I know there's been a bunch in there. So I'm going to kind of pass it back to Ryan because he's been the one, I've been talking for a while, and Ryan's been the one answering questions in the background. So see if there's anything I can help answer back up here.
No, honestly, we've had some great questions. Lots of stuff around income, some stuff around new to Canada stuff, some things around down payments. I wondered if you could touch a little bit, Andy. You mentioned on the builder side, making sure that even though you are going through a builder, to make sure that you use a buyer's agent like yourself. The other side would be people that like to make sign calls and just call a property that's for sale, making sure that they still use you for their buyer's agent to help them through that. Did you want to talk a little bit about that?
Yeah, that's a smart thing, and it's things I need to start putting in here too. So you're gonna see this is the way in Canada it works, and I guess I hear it's different in a lot of places. Canada and the US is fairly the same, but when you buy a property using an agent for you, so let's say you came up to me and said, Andy, I want to buy a place. Instantly from there, I am now your advocate. Instantly, I now work for you and only for you. My job instantly becomes to find you the best property for the best price. And I'm going to make sure that everything is sound with the house. When you buy the house, we do the inspections. If there's issues with the inspections, we do that. My job is to make sure that you are getting the solid property. Now, the flip side of things, this is where Ryan was mentioning about the sign calls. When you see these signs plastered all over the place and online, it's when I sell a property, when somebody comes to me and says, Andy, I want to sell my property, let's get this process started. I instantly now become the advocate for the seller. My job as a seller is to sell their home for the best price I can get for them so I can get the most money in their pocket. Okay. So there's two sides to these things. So when you are starting to shop for a home and you look online and you see there's this really nice property on Realtor.ca, and you call the agent who has it listed and you say, hey, I like this place. I want to come see it. Can you show it to you? Now you're going to the person whose job it is to get that seller the most money. I find it's a very big conflict of interest. How are they supposed to get you the best deal when you're trying to get the best and highest price for their seller? Okay, and a lot of people don't know that. So that's why it's very, very important that when you are shopping, to have somebody who's shopping with you, right? Who's through the whole process. You want somebody who knows now and understands how much you're approved for, knows what you want in a property, can tailor the search to you so you can see all the properties that are available that you want and are interested in. And then when you want to see it, you don't have to go through the whole hassle of figuring out. You just say, I want to look at it on about this date and this time, and we do all the work. We set it up, we deal with the other agents, and when it comes to writing an offer, now again, my job is to negotiate with that side and get you the best price while they're trying to get the best price. So that's why you need somebody in your corner. Going straight to them, you kind of lose the edge of getting a deal at all if you can. Okay, very good point, Ryan. It's something we need to talk about more. Uh, awesome. I'm glad yeah. So thank you, Cynthia, for booking. I appreciate everybody else who has booked too. I look forward to talking to everybody. If anybody's anything else that you think we can touch on, you've been answering all these things, Ryan. Oh, look at
One thing that I did want to mention, and I hear this quite often, would be mortgage rates versus mortgage options. You'd be surprised how many times, and it happens quite often that I get a phone call, and after we've gone through all the process and we've got a lender that's picked, that's got all the right options for you, I get a call that says, yeah, I went online and I found a lender that is offering a slightly lower rate. Can you match that? And, I understand that rates are important, absolutely. But know that we tailor your mortgage needs to the best lenders in Canada. And the best lender doesn't always mean the cheapest price. Now, think about if you're buying a computer or a car. Do you automatically go out and say, I want to buy whatever is the cheapest thing on the market? And the answer is no, you don't. You're going to look for, on a computer, you're going to go and say, I need memory, I need a large screen, I want, an ergonomic keyboard, I want a long battery life. These are things that you want in options for your computer, and you're willing to pay a little bit more for those to make sure that you do have those options. Of course, you want to get that as cheaply as you can, but you do want to make sure that you have the options in your mortgage, or sorry, in your computer. Think of a mortgage the same way. We want to make sure that, yeah, absolutely, we're going to get to the lowest rate that we have possible, but we want to make sure that that lowest rate also comes with the best options that we can give you that help you throughout the lifetime of your mortgage. Having a great rate is one option for sure. Having the ability to put down money penalty free is a great option. Having the ability that should you have to break your mortgage term at any point, that the penalty will be less, that there's no balloon penalties or hidden fees. Lots of these mortgages that you find online, they are online companies. They are fly by night companies. They might have a slightly cheaper rate, but they have hidden fees. They have hidden costs that will cost you thousands in the long run. Know that all of the mortgage lenders that we use are the top bank and mortgage lenders in Canada. They are well vetted by our entire company. We choose them because they have been around for over 50 years. They are absolutely stable. They are not going anywhere. They offer great prepayment privileges and options with your mortgage. They offer great um, penalty calculations should you ever have to break your mortgage that are cheaper than most of the major banks out there as well. They have online systems that you can go on and log in and change your payment, check your balance, find out what your prepayment options are, see when your next payment comes out and how much that will be. Having a great online presence with your mortgage, absolutely a great option that you want. So don't automatically assume that the cheapest rate means the best product. It typically doesn't. Usually the cheapest rate is somebody trying to sell you lemons. So what we're going to do is we're going to make sure that we get you all the options that we need for your individual situation at the best price that we can give it to you. So don't automatically assume that the cheapest rate is the best option, because typically what you get what you pay for. So knowing that that cheapest rate is usually not the best option, they're going to get you somewhere down the line. We make sure that doesn't happen. We put you into the perfect mortgage that fits you and your family's needs, so you're happy all the way through that transaction. I see a couple of questions here from John Paul. Thank you so much. How about Regina and Saskatoon price wise? Great question. Talk a little bit about the market. Yeah. Andy, did you want to kind of talk a little bit about that? There's kind of a few different areas there, Jean Paul. I mean, we can talk about condos, we can talk about townhouse condos, we can talk about single family homes as well. So I'll throw that back to the pro to kind of talk a little bit about average pricing. It's going to kind of depend on what you're looking for as well.
It's price wise is a hard thing because yeah, like Ryan said, it all depends on what you're looking for and where you're looking for, right? In Saskatoon for sure, you know, things are, you're going to get a cheaper option over on the west side versus the east side, right? Same with, are you getting an apartment condo, townhouse condo, you know, half duplex, full house? It all depends on where and what you're looking for, right? When it comes to Saskatoon, Regina is a slight bit cheaper than Saskatoon, but not by a whole lot. And again, same thing when it comes down to there. It just depends on what areas you're looking at, and what type of property you're looking at. So the best thing, and that's why I enforce this a lot, is that whole, checking out your mortgage approval, because then we can shop within the range. So if your range is, up to 450, then we can figure out what exactly is going to be the best fit for you, and then where can we find you the right place and in that budget, right? So I guess it all depends on what you're looking for. But honestly, Saskatchewan is still the one of the, if not the cheapest province to to purchase in still. So that, I mean, that's a bonus here for everybody on this call. I don't know if that really helps answer the question, but I mean, it's kind of a loaded one too.
I was actually just going to say that, Andy. I get market stats all the way across the country. And Saskatoon not only is one of the cheapest markets to buy in Canada, it's actually one of the cheapest markets to buy in the world. But as far as Canada goes, what we find in Saskatchewan specifically, and Regina and Saskatoon are both kind of the same here, but people are very cognizant of pricing here. We don't see a lot of the large peaks and valleys that you see in a Toronto or a Vancouver market. We see a very stable, consistent growth of about 3 to 5% per year of growth. It's a really stable market. Banks love it and CMHC loves it because typically when you buy a home in the Saskatchewan market, you never have to worry about it, plateauing or losing value. You're not worried about, oh my Lord, I bought, and the price is going to drop and I'm going to lose my value. That doesn't happen here. There's only a few places that happens in the country. Saskatchewan is one of the big ones. The other one being Winnipeg is a very stable market, and Ottawa is a very stable market. So the Saskatchewan one specifically, even during COVID, which was one of the most volatile times in the Canadian market landscape. Saskatchewan, the year that COVID happened, um, we never saw a negative growth in the Saskatchewan market when every other province did. They saw large increases and then very steep declines when COVID kind of went away. In Saskatchewan, we didn't see the decline. We saw still a very stable growth and then a continued growth even as COVID started to wind down, which is the consistency and stability of the Saskatchewan market will make sure that whatever price point you're going to buy at, John Paul, know that that is going to continue to appreciate as you go forward. It's not going to spike up like it does in Toronto, but it's also not going to drop down like it does in Toronto as well. Stability, and growth over the years is what we pride ourselves on in Saskatchewan. Now, the backside of that too, and I'll kind of just mention this as well, is people that say, I'm going to wait the market out. I'm going to say, things are really, really expensive here now. I'm just going to put it on the back burner for a year and wait for prices to drop. And so the backside of that conversation is that doesn't happen here. We don't see the large price increase and then the big fall. We're going to see a nice steady 3 to 5% increase every year in Saskatchewan going forward. So to wait out the market, it just isn't going to happen. What happens if you're going to wait out the market is that same house in a year will be probably $20,000 to $30,000 more expensive. So waiting on the market here in Saskatchewan, not your best option. I would rather have you put money into your own mortgage and your own equity than giving that money away to your landlord. Let's get you into something. Let's put that money in your pocket, keep it in your pocket, and watch your equity grow as your property grows forward. I'm sure that was a long-winded answer for you, but hopefully that gave you a little bit of market information, John Paul, and you know what, book a call with us, and we can continue that information going forward as well.
Yeah, well, good stuff. Yeah, I don't really have much more to add unless anybody else has any questions on anything. But if not, I appreciate everybody hanging out with us tonight and hanging out till the very end here, and happy to talk to everybody who's booked calls and everybody who's gonna book calls in the future.
Yeah, absolutely. And I said, I just wanted to mention we're here to not only be a great source of information, but we're here to navigate the process all the way through with you as well. We've been doing this a long time. We understand, the process of writing an offer on the real estate side. We understand, what documents we're going to have to get you to obtain as we get income and down payment approval. We understand timelines on getting lawyers set up and getting down payment money in and things like that. But we're going to guide you all the way through that transaction. When something needs to happen, we're going to let you know what's upcoming and how to get ready for it and when that timing is the best. So we're going to walk you all the way through that process. We're here to be with you hand in hand all the way through that. So don't worry. We realize it's a lot of information, but we've done this a long time. We've done this with many clients, and we're looking forward to, really being your eyes and ears on the ground and walking hand in hand with you all the way through the process.
Very well said. Very well said. Well, I guess if that's it, though, if there's no other questions, I appreciate you guys sticking around again. Ryan, again, as always, I appreciate you helping out and giving everybody some great info as always. But if that's the case, we're going to wrap this up. And you guys, like I said, tomorrow I'm going to get you guys the email for the recording of this, the books, the buyer's guide. Should be coming at you tomorrow. If you don't see it by tomorrow, please reach back out to me and I'm happy to get it to you directly. But yeah, look for that tomorrow. If anything else, you guys enjoy the rest of your December. Enjoy your holidays, whether it's Christmas, whatever, in your new year, and look forward to catching up in the new year.
You guys have a great night. All the best. Look forward to talk to you soon.
All right, take care.